Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me at the market site in Times Square, we have Chris Dearborn. He's a Managing Director on Nasdaq's Market Intelligence Desk with the midday update. And we're also going to take a look at the consumer and retail stocks going into a heavy week of retail earnings next week. And of course, CAGNY, February 17th through the 21st. Chris, it's great to have you back with me. We haven't been together
Happy Valentine's
in quite some
Day.
time. Happy Valentine's Day.
I love the bling.
I know. This is always great when we have our diamond friends come in.
It is.
All right. Taking a look at the action this week. Choppy to say the least.
It is, but indexes today are really relatively flat coming into the long weekend. You've had some nice volatility, but again, the markets keep posting higher highs, as seen by all the major indexes. And what that's telling you is that sentiment is really still positive towards the U.S. equities, and that's really a good thing here for the markets as we move into a number of unknowns, including the unknown fears of what the coronavirus might have on the lasting impact of GDP, not just for the U.S., but for China and thus global.
All right, let's take a look at our first chart here. This is the consumer discretionary index. Again, clearly trading over its moving averages here. We'll see how that reacts. We have a number of retail earnings next week, including Walmart. And CAGNY, of course, that's a consumer group conference in New York.
A couple of good things in the consumer space and the retail space came out this morning on the economic front. Retail sales came in line as expected, showing growth month over month of 0.3% uptick versus a 0.2% uptick last month, which is a good item. December was revised down a little bit lower. And then you also had consumer sentiment from the preliminary University of Michigan index for sentiment, which came in at 100.9, which is just shy of an expansion which we saw back in 2018 when the high read was 101.4. So what that means is the consumer's in good shape here, and you're seeing that in discretionary. The earnings will be the tick up or down of what we're going to see coming next week, especially with Walmart and a lot of the restaurants and everybody else. You got Garmin, Gap, Dr. Pepper, all these, we're going to see what the consumer spend is looking like, both on the staples and the discretionary side. But if looking at this chart, it looks very good. It's one of the best performing sectors over the last 2 years, right behind tech. And what you're looking at here, this is the broader-based S&P 500 Consumer Discretionary Index. It's one of the main 11 GIC codes that go into the S&P 500, and it's making higher highs. You're looking at the pullback here and the higher high moving across here. The January pullback that you see here closer to you, Joe, with the two big lines coming down to 976, is the news on the corona outbreak and what that might have been impacted. Again, unknown. Investors do not like the unknowns, and you saw the sell-off there. Once that story started to get corralled a little bit and a little bit more hands-on and a little bit more reporting from the news, the index really started to take off. And that's showing you that there is strength still in this sector. And it's not just being led by Amazon and Walmart. It's being led by a number of others like Tractor Supply and a few other stocks that are domestically based, making higher highs.
Right. Well, it's also helpful, too, that you have China and the U.S. injecting a lot of liquidity into the system.
As they should.
Let's say, okay, so fun consumer stats from the National Retail Federation, nearly $27.5 billion are going to be spent on Valentine's Day this year. $5.8 billion will be spent on jewelry. That's a 32% increase since 2019. So clearly the consumer is feeling good about the economy.
The non-farm payroll number 2 weeks ago, or last week, showed that there is growth in wages. Unemployment still continuing to be low. Jobs are increasing. It was a hot number. Came in much higher than expected, I think at 256 over like a 165 read, showing you that more people are moving back to work, that paycheck is being spent, which is good for discretionary names.
All right, let's wrap it up here with the S&P 500 Retail Index. It looks kind of the same as the other chart.
A little bit similar, but a little bit deeper of a dive here. So this is the sub-index, level 2 GICs, the S&P 500 retail stuff. Again, most of these companies roll into discretionary, but what you're looking at here is all-time highs in the index as it continues to break out. It did not sell off as much as the discretionary did off of the Wuhan coronavirus breakout, and this is a good thing because next week we get a true look at the heavyweights that are going to come in here. You're looking at Walmart, you're looking at Gap, and a number of the other major retail names that could push this index to all-time highs.
All right, short week next week too, so it should be plenty packed for
everybody. No trading Monday, 4 days. You get a lot of earnings, some economic numbers, CPI, PPI, and the flash PMI on Friday.
All right, FOMC minutes on Wednesday too. Never a dull moment, that's for sure. Thanks so much, Chris, as always, for joining us. And thank you for joining me on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.